U.S. President-elect Trump's advisor on Israel-Gaza ceasefire deal and advisor to U.S. President-elect Donald Trump stated that Trump aims to implement an Israel-Gaza ceasefire deal before January 20. No further details are available at this time. Market reaction: the U.S. dollar index, DXY, was last seen trading at 106.36, remaining modestly flat. ING's FX analyst Chris Turner noted that good dollar demand is expected to emerge if it trades below 106. Trump's impact on the USD. A column in the Financial Times suggested that 2025 will see Trump pumping more air into the USD bubble. The article highlighted that while the dollar might strengthen initially, it could soften in the medium term due to potential rate hikes and subsequent cuts by the Federal Reserve. U.S. dollar weakens on jobless claims. The U.S. dollar index plunged below its 20-day SMA, trading below 106.00. This decline is driven by weaker-than-expected labor market signals, including a rise in initial jobless claims and an increase in layoffs reported by the November Challenger job cuts data. The upcoming Nonfarm Payrolls (NFP) data release on Friday will be crucial in determining the USD's short-term dynamics. Daily Digest market movers: Buck continues weak ahead of Friday's NFP. The Challenger job cuts report for November revealed 57,727 layoffs. Weekly initial jobless claims for the week ending November 29 surged to 224,000, exceeding expectations of 215,000 and up from the previous week's 215,000. The CME FedWatch Tool now suggests a 70% probability of a 25 basis points (BPS) rate cut at the Federal Reserve's Fed December 18 meeting. As the Fed has stated that it remains data-dependent, if NFPs on Friday show weak results, it might start to fully price in a cut in December's meeting. DXY technical outlook: short-term weakness intensifies. 20-day SMA on the U.S. dollar index, DXY, broke below its 20-day simple moving average SMA, marking a critical technical setback that has weakened its short-term outlook. Indicators such as the Relative Strength Index, RSI, and Moving Average Convergence Divergence, MACD, are nearing negative territory, underscoring the growing bearish momentum. Key support levels now lie at 105.50 and 105.00, while resistance may emerge at 106.50 and 107.00. With the DXY losing steam, market participants will closely watch Friday's NFP data for any signs of reversal or further deterioration. U.S. dollar on the back foot after Challenger job cuts and jobless claims print. The U.S. dollar is in negative territory in the U.S. session with Challenger job cuts and jobless claims ticking up ahead of Friday's NFP. The U.S. dollar index, DXY, failed to close above the pivotal 106.50 level and undergoes harsh rejection. The U.S. dollar, USD, is selling off this Thursday ahead of Friday's U.S. non-farm payrolls print in the U.S. jobs report for December. The depreciation of the greenback got triggered with very bearish data from the weekly initial jobless claims and the November Challenger job cut data, where both elements pointed to a pickup in layoffs. NFP expectations lowered. The Challenger job cuts report for November came in more bearish than the October one. The November number came in at 57,727 layoffs against the 55,597 layoffs seen in October. Weekly jobless claims data for the week ending November 29 was a big beat of expectations, coming in at 224,000, over the 215,000 expected and higher from 213,000 last week. The CME FedWatch Tool is pricing in another 25 basis points, BPS, rate cut by the Fed at the December 18 meeting by 74%. A 26% chance is for rates to remain unchanged. U.S. dollar index technical analysis: Friday could get ugly. The U.S. dollar index, DXY, is turning into a snooze fest, not set to wake up before the U.S. jobs report on Friday. With some lighter U.S. data, only headline risk could take place in an otherwise calm Thursday. With the tight range in the U.S. dollar index, the nearby levels at 106.52 and 105.53 remain pivotal to watch. On the upside, 106.52, April 16 high, still remains the first resistance to look at after failing to close above it this week after several attempts. Should the U.S. dollar bulls reclaim that level, 107.00 round level, and 107.35 October 3, 2023 high, are back on target for a retest. Looking down, the pivotal level at 105.53, April 11th high, comes into play before heading into the 104 region. Should the DXY fall all the way towards 104.00, the big figure in the 200-day simple moving average at 104.03 should catch any falling knife formation. U.S. Initial Jobless Claims increased to 224K last week. Initial Jobless Claims climbed more than estimated to 224K. Continuing jobless claims rose to 1.871 M in the week ending November 22. U.S. citizens filing new applications for unemployment insurance rose to 224K for the week ending November 29, as reported by the U.S. Department of Labor, DOL, on Thursday. This print came in above initial estimates, 215K, and was higher than the previous week's tally of 215K, revised from 213K. The report also highlighted a seasonally adjusted insured unemployment rate of 1.2%, while the 4-week moving average was 218.25K, marking an increase of 0.750K from the prior week's revised average. Moreover, continuing jobless claims went down by 23K to reach 1.871 M for the week ending November 22. Market reaction: the greenback remains on the defensive, reversing Wednesday's small advance, and prompting the US dollar index, DXY, to retreat to the sub-106.00 zone, or 3-day lows. The US dollar, USD, is trading a little softer overall in quiet trade. Overnight news is relatively limited, and the softer USD tone rather reflects the decline in US yields seen yesterday, a modest relief rally for the euro, and some JPY gains on the back of mixed/slightly hawkish comments from the BOJ's Nakamura last night.